Hello, and welcome to Flourish Conversations. Thanks so much for joining us. This is when we speak with fintech leaders around the world on what's happening at the cutting edge of fintech and what it takes to shape the financial system for the better. My name is Emmalyn Shaw. I'm the co-founder and managing partner of Flourish Ventures. We are an early stage global fintech fund, really focused on backing financial tech entrepreneurs that are seeking to disrupt financial services, that are driving economic resilience, and are really, through technology, really looking for ways to improve the financial services system for consumers and businesses alike. So today, we're super excited. We're going to talk about a sector that is just growing off the charts and an innovation that we just can't seem to contain and is obviously making huge impact. And that's really fintech infrastructure. I think that we've seen just an abundance of advancements, particularly in fraud mitigation, payments infrastructure, credit infrastructure, insurtech infrastructure, and as importantly, the enablement technology layers, right? Those that are enabling financial services to be embedded in non-tech platforms. We're really honored and excited to have made early bets in and partnered with some of the leaders in the space, and we're lucky to have them here today. So on our panel, we have Guy Assad, the co-founder and CEO of Clerkie, Laura Spiekerman, the co-founder and president of Alloy, Rith Martin, the co-founder and CEO of Skipify, and Amanda Swevelin, the CCO of Unit. Now, before we kick this off, I just want to give a huge shout out to Rith Martin at Skipify. He insisted on joining us today, despite having just come off major back surgery just 2 days ago. So we just wanted to say thank you so much. Huge testament to your dedication to the fintech ecosystem, and really grateful for making the time. And more importantly, to all of you, thank you so much in advance for joining us today.
Thanks for having us, Em.
Thank you.
Awesome. Well, look, let's just start by grounding us in what is the core solution that you're providing. What is the kind of pain point that you're trying to solve for your customers, and why did you choose to focus there? So maybe to kick us off, I'll hand it over to Laura.
Thanks, Em. One of the things that's exciting about being in 2023, amongst many things like AI and self-driving cars, is that identity has become this kind of hot topic, and it's both this incredible opportunity, right? Especially in financial services, if you know who is on the other side of a transaction or a product, you can offer them a lot more potentially. On the other hand, it's also this potential trap, compliance trap, fraud trap. And so I think it's kind of this unique place that we play in. And what we do specifically is we have a platform that helps financial institutions, so both fintech companies and banks, manage their identity risk. And we do that by offering access to tons of data. And one of the core value props is that you don't have to make, you as a fintech company or the bank no longer have to make this trade-off between a great customer experience or delivering great financial products to thin file folks, immigrants, youth, and kind of the trap of fraud or jail time, compliance fines, et cetera. So we really our platform lets you balance that risk and make the appropriate decisions with all of the data that you can access.
No, incredible. And obviously just really meaningful from an expansion of availability of financial services to individuals and revenue for your partners. So just truly incredible. Rith, how about you?
Yeah. So we're Skipify. We're the easiest way for shoppers to buy products online. Our product that I think we're most well known for is a connected wallet. And the way that it works is, for the first time, it allows card issuing groups and financial institutions to connect with their customers in the moment of purchase. So as a shopper goes to buy products and they enter their email address into checkout, we can look that email address up against people who have American Express cards and a number of other card groups that are partners with Skipify. That person then gets an OTP directly to their phone with a password, and that gets automatically entered inside of their user interface. And as a result, that card issuing group is now authenticating that shopper on the front end of the transaction and passing all the payment information behind the scenes, and also the personal information of that shopper directly to the merchant. So a consumer doesn't have to go through a checkout anymore. As a result, that merchant gets 99% authorization rates. Usually they're at 92 to 94% authorization rates without any increase to fraud. And shoppers that have used Skipify 2 or more times convert at 80% or higher inside of checkout. A lot of times merchants are seeing 20 to 50% conversion rate, particularly on mobile. So a connected wallet from Skipify is offered by merchants, but also partners with card issuing groups, financial institutions. And I think we're excited about creating some new protocols for digital wallets in particular. Yep.
Yeah, thanks, Rith.
Yeah.
No, it's just incredible. I think it'll be an amazing experience to broaden that access again for consumers and for businesses to be able to deliver that.
Yeah.
Amanda, how about you?
Great. Hi. Thanks for having me. So at Unit, we really bring together banking and our bank partners, along with technology companies or software companies or anybody who's looking to partner with a bank to offer some type of financial product or service. So typically our clients are either a company that wants to innovate and create a new financial product or service, and that's all they're focused on, or we serve clients that have an existing product or service in the marketplace, and they want to they want to embed or add a financial product or service, lending, deposit products, whatever it may be, into a financial offering that we have. We make it very easy for them with our tooling to connect with bank partners and to be a service provider to that bank and to offer a product or service in partnership with our banking partners that we also have connected with to put those products into the marketplace. We know that financial products are incredibly beneficial for these companies to add into their products and services. But we also realized that it's a highly complex and highly regulated space. And we really started because we didn't think that the existing products that were in the marketplace when we started a number of years ago were meeting that need to create simplicity. And, really at the end of the day, we want to make sure that the tech companies and the banks are able to really enhance and execute on the mission of expanding financial services to a broader group of people.
No, thank you so much. And it's very clear that for a lot of these non-technical platforms that have been able to embed, they really are seeing kind of massive LTV and retention and engagement. And so in a trusted platform, right, to engage in financial services. So really compelling. Guy, how about you?
Yes. So for us, we're actually focused on a whole corner of the financial ecosystem, which is kind of like, the debt recoveries process. It's actually an area that doesn't see too much innovation. It's also very fraught with, some predatory practices. And, our mission is to basically streamline and clarify that as much as possible at Clerkie. For those of you who might not know, we are Clerkie. We basically build financial automation platform that help struggling families repay back their debt. And one of the things that we do that's fairly unique is, if a family is struggling to repay back that debt, we make sure that they can discover in an automated fashion, bespoke financial wellness programs that their creditors or their banks might already be offering that they don't know about, or that, some other third party might be offering that they don't know about to help them basically sustainably repay back that debt back to their creditors and avoid a negative event on their credit report. For us in terms of kind of results, typically like a bank would recover anywhere between 10 cents to 20 cents on the dollars for any debt that goes into delinquency. We're able to basically double that or more in some cases, depending on the deployment that you're looking at. And that's pretty much all we focus on. And we have seen interesting use cases that are starting to be born out of that, be it on the fraud space or kind of on the authentication space. And so it's an exciting time, still early days, but very excited to be solving that problem for the banks.
Great. Thanks so much, Guy. Definitely a big problem for consumers and for banks, right? So it is a win-win, a unique win-win solution. So maybe I'm going to throw this question specifically to folks where you might at the onset think, well, is this really infrastructure? So, not all B2B businesses are infrastructure. And so maybe I'd love to understand a little bit for some of the folks here, what is it that you believe position you guys as an infrastructure? What do you think you're modernizing, or what are you fixing that's just fundamentally broken with the system? So maybe I'll start off with Rith.
Sure. Yeah, I think when I think about infrastructure, particularly in fintech, I feel like there's been this sort of evolution of how the infrastructure is changing across the category. If you see like the early entrants in the space, particularly that did things like peer-to-peer lending, a lot of those companies and products were basically like, how do you create easier applications to existing products and technology? How do you create better UI? Got very much the front end of the user experience. And in some cases, some of those companies actually had kind of more difficult infrastructure and business per unit economics and challenges that, over time kind of made those companies, I think, harder to operate and less successful. And so specifically around the infrastructure piece with Skipify, we think about ourselves as an infrastructure company that has a digital wallet attached to it. So as an example, without Skipify and before Skipify, the way that you pay for products is that a shopper has to have their credit card. A shopper manually enters all their information into checkout, including their credit card number, which they put into that merchant's website. That merchant website then interacts with a gateway or a PSP, and then that group sends all the information through a scheme, a card network, directly to a card issuing group. And then that card issuing group, without even interacting with the shopper, makes a decision to approve or deny that transaction. And that card issuing group has no way of interacting with the shopper in real time, right? So if you look at the credit card that you use right now for that transaction, the numbers on that credit card are raised because they're still designed to use for a zip zap machine, which is a carbon copy that you would run over the top of the credit card 30 years ago. That's the protocol that we're still using, right? And so how we're creating new infrastructure is we're creating a nexus for the first time where that card group actually participates in the checkout itself. And by directly connecting the card group with the shopper, then you create a better user interface and a better user experience because the protocols are different. You now have that card group interacting with that person in real time. And then the person doesn't have to do any work anymore. The person doesn't have to manually enter their info because the card group already has it. The person doesn't have to submit their credit card information because the card group already has it. And in the cases where a merchant has 92 or 94% authorization, there's a chunk of their transactions that are risky and they have to deny all of them. Instead, the better protocol is to have that card issuing group do a step up of that shopper in real time to see if that's really the right person. Ask them for their CVV in real time. Ask them for a security question in real time. Ask them for their zip in real time inside of that user interface. And so by asking those additional questions, that card issuing group can make sure that it's really Rith Martin in the transaction and approve the transaction without increasing fraud. And so I think at the core, for fintech companies to really be successful, they have to be reinventing the infrastructure and they have to be reinventing protocols. And if and when they do that, then there will be superior results and a better user experience, but it all depends on better infrastructure and better new protocols.
Super helpful. I really appreciate that, Rith. And
Yeah.
obviously, and I think we all are reminiscent of those raised credit card and the old
Knuckle
school
buster.
stuff.
Yeah.
Exactly.
Right.
I think I saw Amanda laughing. Maybe I'll throw it over to Amanda, just as another, I think banking as a service players, embedded finance players in particular, they've had to do a lot to build the kind of really streamline and put together a number of workflows that didn't even exist and certainly don't exist for most non-technical, SaaS providers that want to offer financial services. So maybe I'll throw it to you in terms of where do you see kind of the infrastructure part of your innovation?
Yeah, I'm gonna kind of just follow on with the example that Rith gave in terms of what happened before Unit existed, right? A technology or a software provider that would want to offer, let's say, a deposit account. What they would have to do to come to get that into market would often be, go and meet a litany of different bank partners, and even get the phone call and in the door. And then they would have to go meet with somebody like Laura and maybe other folks in the space to figure out how they're going to do KYC for their various customers. And then they would have to be like, hey, well, so what ledger, what processing, what this, right? There's so many variables that go into just being able to get a compliant product into the marketplace. And so Unit, puts all of those things together as an infrastructure to be able to do that, to make sure that the companies, all those things are still in place, right? The clients and the fintechs are still going to meet their bank partner. They're going to have a deep relationship with their bank partner. To have that. But all of the tools and the protocols are already built into that piece of it. So they don't have to go out and try to bundle these pieces together. It's all just part of our infrastructure that we've built to have that. And we see great successes because our clients aren't trying to bundle a bunch of things together and package it. And our bank partners like it because it's one consistent place that they can go and look at, how is this functioning today? How is this working? They know when they're working with clients using our infrastructure, they know that they're going to see Laura's system, or they know that they're going to see a certain component. It's going to be the same way. In the old model, the bank might have to look at 20 different programs in 20 different ways, right, to look at those types of things. So that's how we're building that innovation in the infrastructure, is really bundling and providing a consistent way for these processes that have often been bespoke to function.
Yeah, thanks, Amanda. And if I recall early on when we were looking at the investment, I think it was something like 2 million in a year and a half as well to boot.
Yeah.
So in addition to all of that complexity, it was pretty costly and pretty time consuming. So yeah. Anyhow, so okay, we'll hand it over to Guy.
Yeah, sure. In our particular case, I like how Riff and Amanda, just suppose the old way of doing things and the newer way of doing things. As you know, there wasn't really a digital way of doing things for us in the old way. Very often, what the banks would typically do, or the creditors would typically do, is they would rely heavily on call centers, people making phone calls to folks trying to recover dollars as much as possible. And when that wouldn't necessarily work, they would basically outsource that. So there's a lot of BPOs going out to third-party collection agencies or third-party credit counseling agencies and so forth. And I think the big aha moment that we realized when we were working with the banks on some of these digital transformations is that their existing legacy systems couldn't necessarily accommodate some of the digital newer ways of helping someone pay or move money from point A to point B without necessarily having to make a phone call or having to submit sensitive card information. And so what we're doing is we're building the guts of that infrastructure, basically trying to meet consumers where they are, meaning where they're banking, where they're basically saving their funds, where they're earning income and so forth. And we're trying to streamline basically that movement of the money from point A to point B. And again, if they cannot necessarily repay back that particular debt, we're trying to be helpful and in a compliant way, but also in a very frictionless way to help them discover some of these wellness programs that can basically help them get back on track. And so for us, again, it's not necessarily apples to apples comparisons. It's more like a melon to apple comparison, but we're trying to basically build it day by day, and we're discovering new things along the ways, and we're excited about that journey.
Oh, that's great. I think I'm going to use that melon to apples. I think that's actually a very good one. All right. Well, Laura, I think we all know that you guys truly are at that point of infrastructure and innovation. So I will spare you that answer, because I think we've all seen the journey and seen how transformative you guys have been in the KYC and KYB space. And we hopefully get a chance later to talk about some of those use cases that we've really been impressed by over time. But let me just pause for a moment. So, I want to ask this question of Amanda specifically. So she is, again, the Chief Compliance Officer for Unit. She was one of their very first hires and also most senior hires at the organization. I remember, Itai and team being maniacally focused on compliance being a core tenet, and is one of the reasons we got excited about the business. And so maybe I'll hand it over to you specifically. I'd love to get a sense from you now, you're in the seat for a while. You reflect, how important is compliance? How critical is it for Unit's success as a true embedded finance leader? And what areas in particular do you think are particularly important as you kind of focus the business and its journey?
Yeah, so I just celebrated my 3-year anniversary. So I have been here for since very, very early days, and it's been an exciting ride, and it has been and remains a core focus of our company. I have one of the largest teams at the company, and I have lots of friends within the ecosystem, or within Unit, with my legal counterparts, my information security counterparts, fraud counterparts. It makes up a big piece of our company and what we offer and what we really thrive on as an organization. And I feel like being able to talk to our banks and listen to our banks in a way that I can translate, because I've sat in that seat before at a bank. I've been a chief risk officer at a bank before. I've been a regulator before. And so I can really empathize, with what our banks are hearing, and talk to them also then about the tech and the other side of the business, and really represent our clients and have that translation layer almost between the two, to make sure that we're building a product that's very safe, secure. It's what the banks need to exhibit sound oversight over the product and build with the regulation in mind. But also to innovate with the banks and to innovate with our clients and our partners, because I think that we all know we do better when innovation happens, and that we can reach demographics that we haven't been able to reach before, to be able to do that. And I think our clients, I think our bank partners, I think everybody in the ecosystem is very excited about if you go about it by doing the right thing first, and following that mantra, good business success can come with it. So it's been a fun ride and journey for me over the last 3 years that we've stayed consistent to that mission.
Yeah, I know, without question. And I think having that thought leadership as well across the board has also been, I think, just a huge testament to the focus of the team. Well, this is kind of a close cousin to the question. It's really for the rest of the group. As we think about, as we all know, there's been, more regulatory scrutiny, particularly as it relates to partnerships with banks. So that could be fintechs with banks or third-party vendors with banks. I'm curious, how has that impacted your business, and to what extent, how have you shifted, or what areas have you prioritized to mitigate some of that scrutiny? And maybe I'll start with Laura. You're nodding, so I figure there's definitely a response there.
I love regulatory scrutiny. I think this is, we are entering this period of increased regulatory scrutiny. We've sort of, it's been heating up. You can see it, the OCC. There's all sorts of agencies, I think, that are heating up their activities, and we're also simultaneously doing a lot more of the bank fintech partnerships at the same time, right? So we're kind of like doing this new business model thing, trying new things for the first time, at the same time that the various agencies are increasing their pressure. So it's not an easy time, I think, to be running a fintech company. We did, Alloy recently put out a compliance survey and report that found that, to me, was sort of shocking number of fintech companies had actually paid huge fines, much larger fines than I would have expected. We're spending tons of time on this. And I think the thing that really stood out to me was, one, the most time-consuming activity was SAR filing, suspicious activity report filing. So that's sort of one thing. I think what that told us, and what other parts of the survey findings told us, was that there's a need for automation. We don't believe full automation is coming, meaning no humans. We think human intervention will remain in this industry, probably for good reason. But that automation is important. There's a lot in SAR filing in particular. There's a lot of people and a lot of paperwork that gets done, and a lot of false positives on things you have to deal with, right? So there's just a lot of stuff to sift through, and it's an obvious case of kind of automating will help us here. I think the second thing that sometimes gets overlooked is the need for transparency. So we can build all sorts of things to have better outcomes, right? Fewer false positives, make sure we're finding the right transactions or the right bad actors. But a lot of what the hard part is actually just demonstrating that you're making those decisions in the right way, building your own paper trail, building some auditability and accountability, not only for yourself and your regulator or the agency, but for yourself and your bank partner, and for the bank partner and you. And do you want them to have full access? Do you want them to, can the bank partner control how you make those decisions? Can they just have read access? So there's just a ton of stuff in there that is not necessarily about better decision-making or better outcomes. It's about making sure we're kind of opening up how we can all look at it and access the right data and understand how decisions are getting made. So that's where we're spending a lot of time, is building out great tools, not just to automate, but to make the readability easier on everyone.
Wonderful. Okay, thanks so much. Amanda, how about you?
Well, I agree with everything that Laura just said. Transparency is a huge piece of the puzzle for us. And we dedicate a lot of engineering resources into just building into our product pieces that create transparency for our clients and for our bank partners, and just making sure that everybody's talking to each other in the ecosystem. And I think one of the things that we see right now with the regulatory, and we actually like the regulatory attention. I know that might seem crazy, but like it's a regulated business. Like, we want people to understand what's going on. We love the fact that there's new third-party risk management guidance, right? Like, clear rules of the road about what to expect. That benefits everybody in this system. And so right now it's really about like telling our story and telling what we do, because not everybody in the ecosystem does the same thing, right? And so what's important for us is to make sure that we're telling our story and what we do, and how we think about things, and why we think our infrastructure keeps the ecosystem safe, and why we believe in what we're building for that piece of it, and how we can take and embed pieces of regulation into that to create that transparency that Laura mentioned that is just so hypercritical. I mean, if you're playing in this space today as a software provider, it has to be about transparency and making sure that all the parties understand what's going on.
No, absolutely. And I think kind of figuring out that playbook, particularly on behalf of newer players that aren't as close, that don't have the experience that you do, having been on the other side at Sunrise, I think it makes a huge difference. So no, it's very appreciative of the work. All right, let's move a little bit to kind of partnerships. We know in an infrastructure world, partnerships are very critical. We've been fortunate to see both Alloy and Skipify at their earliest of stages, and watching them and seeing some pretty meaningful unlocks for both of the businesses, and seeing how those partnerships have really provided kind of just incredible stickiness, incredible kind of core infrastructure over time, and really difficult to replace. So maybe we'll start with Riff. Talk a little bit about kind of how have you been able to do them? What did you do right? And any kind of words of wisdom for those aspiring, B2B infrastructure entrepreneurs that are starting out?
Yeah, sure. I think, about 9 months into the company or so, we were able to get a really neat partnership with Google to build shopping inside of Gmail. And the results of that were really, really good. So Google ended up taking us to a bunch of events and did a bunch of press with us and a press release. And, before that, we had met with a number of financial institutions and banks about connecting their cards and accounts into Skipify. And the answer at that point was like, hey, not really, keep going. Great idea, but not yet. And so the Google partnership was a huge unlock for us, because in order to be able to work with Google, we had to do a ton on our infrastructure side to be able to actually go execute there. And not just our infrastructure, but all sorts of areas of our company, from a compliance perspective and audit and threat management and all sorts of things. And so it really allowed us to kind of up level. And then in part from some of the Google relationships, we were able to get American Express and Synchrony and a couple other groups to really pay attention to Skipify. And so that was the start of then getting American Express to partner with us. They invested in Skipify 3 times and went through a process for about a year and a half, 2 years to connect Amex cards and accounts into Skipify. And that was a huge help for us, because it allowed us to build the right compliance infrastructure and everything we need on our side to work with large financial institutions. And so as Amex was the first customer there, we then started knocking down the time that it takes to get new financial partners from 2 years to a year to 6 months. And now it's in sort of the 3 to 6 month range. And so through that process, I think we've just built up a lot of capabilities to be able to deliver there for those groups. At the beginning, it's pretty much impossible. And then you get a little better. And then that becomes an area of momentum and even defensibility for the company, because those partnerships are just really, really hard to get. And as you get better at doing them, it's easier to win other groups.
Oh, great. Thanks so much, Reth.
Yeah.
Laura, how about you?
Yeah, I think partnerships were core to our value proposition as a company. We're partner agnostic on the data side, and we sort of guarantee to our clients the flexibility to add, maintain, create new rules around some of these data sources that you're using to make your identity decisions as this orchestration layer. And so it was important to us to have those relationships early on, continue adding them, and sort of build an engine that was partner friendly, both kind of from a technology perspective, but also from a business model perspective. I think that has worked quite well. And I think the number of data sources has grown sort of exponentially more than we could have ever thought. And so I think it was sort of the right bet to make that really easy, to make that partnership flexible and kind of easy and quick, or as easy and quick as you can make it with some of the credit bureaus, for example. On the other side, so from an integration standpoint, we work with a number of different partners, distribution channels, referral partnerships, all sorts of things. I think my biggest lesson was to be client driven, right? So like we as a startup have limited time, resources, et cetera. We would love to integrate everything under the sun and kind of speculate, place bets. In reality, we have to be client driven. We have to be prospect driven and think through what's actually going on the roadmap based on demand that we're seeing. The other thing was treating those partnerships as if we were still owning the end-to-end process with the end client ourselves, regardless, especially for the first 5 deals we would do together with someone else, for example. And I think that built up a lot of goodwill with the partner, built up a lot of goodwill with the end customer, and let us learn the nuances of every partnership. They're always going to be a little bit different. You're always going to hit bumps in the road. You're going to have some integration challenges. You're going to have support challenges. How do your docs really match up to what you're doing? So I think for us, getting really involved in those deployments and making sure those first few are super successful and super happy and like in a way that is not cost effective at all and not scalable was really critical for us to kind of figure out how to do those at bigger scale, which we're doing now.
Yeah, no, I think that's so well put in terms of thinking through the investment that you're going to make to kind of hopefully maybe even streamline some of these, understand how to get them done at scale as you start to really ramp, which you guys have done an amazing job at. So thanks to both of you guys for that. So Amanda, how about you?
In terms of the AI side of things?
No, in use cases. So any use cases that you've kind of come across and for a unit in particular, and where compelling ROI and ability to serve your end customers has really come to light.
Yeah, one of the examples that I think is just really great, especially kind of from the mission component, is one of our clients, Forage, who serves folks that are on food assistance programs. So they allow for shopping for food items and online retailers and food distribution and grocery stores to accept SNAP and EBT payments online, right? So now you're opening an ecosystem of kind of being able to eliminate food deserts. Mm-hmm. And opening up access for these benefits to be used in new ways, but also allowing the retailers then to reach new markets in a way. So it's a unique use case of being able to take kind of a niche focus, but the benefits and the economic ROI along with the social ROI that comes along with it is incredibly meaningful and just really exciting for us.
That's incredible. I love that. Rith, how about you?
Yeah, I think and just to zero in on the question here, it's like compelling use cases of Skipify where we're seeing significant impact. Yeah, I think one of the biggest areas for us is the value we're creating for our card partners, and then how that extends into shopper experiences and merchant value too, right? So if you look at the options for digital wallets for financial institutions, there's actually a lot of potential conflict there for them. If you think about probably the largest digital wallet that everybody can name on this phone call, that group now has their own financial products and credit products and saving and checking account products. And so there's a lot of now direct competition between digital wallets and financial institutions. And so us creating a durable digital wallet where those financial institutions aren't going to have competition with us because we're busy creating other products and frankly don't ever want to compete with them is a huge value driver for all those groups. And so then as a result, because they are connecting their cards and products into Skipify, including things like alternative payment methods and buy now, pay later products that have way better per unit economics for merchants and for shoppers, easier access to points and rewards from your cards. Then all of a sudden merchants get better conversion rates inside of checkout. They get increased cart size. They get their shoppers accessing things like alternative credit without having to leave their website or funnel to go re-authenticate somewhere else. And then the shopper gets all of this experience in a way that's consistent and trusted and easy and secure. And so, at the start of it is understanding at the end game, what's the different user experience and how does that create for the shopper a better life to a certain extent. But then the underlying value and protocols really connect into those card groups. And that's the unlock that then allows us to go to the merchants, which then trickles down to the shopper.
Yeah, I cannot underscore the importance of being able to have that optionality, even as a consumer, but also I think certainly no one wants to be overly beholden, particularly if there's competing products
Yes.
that definitely shift incentives and alignment. So I think we're kind of getting to the end, and I feel like we've talked a lot about your respective businesses, where you see where you guys have prioritized with respect to regulation, where you think the best use cases are, certainly the journey and what you've learned, and so appreciate that. I think what I just love to hear is kind of looking forward. If you were to start all over again, you had a blank slate, and I imagine you still wanted to play in the fintech infrastructure domain, particularly because it's had such massive transformation as of late, and you guys have been massive contributors to that. I'd love to hear maybe in a couple of words or even one word, what is one area where you think infrastructure still is underdeveloped and where a new entrepreneur would really value spending time? And maybe you'd partner with, because that's exactly the space that you think is particularly catalytic and needed in the industry. So maybe I will start with Amanda.
Great. I have lots of problems that I need to solve, right? That I run into each day. And the thing is, right, it's always best when you can focus on what you do best, right? And so we have an amazing team that builds the infrastructure, to do the connectivity and build what Unit does, right? But when I need KYC or KYB for, so I think the interesting piece of the infrastructure is Laura's nailed that piece of the market down, but there's other things that pop up that infrastructure companies like all of us run into each day. And it would take away from our core competencies and the products that we're building. Well, yes, our team could go build that and could do that because they're talented people, but it's not what we do. And so I think there's still a lot of space to come and talk to infrastructure players. And Laura probably even has problems she needs to solve, right? Where there could be somebody that could solve that, something that she has today. So I think that there's still unique pieces of innovation that can help that allows us to still do what we do best, building our infrastructure, but that can help bolster that in those partnerships.
Fair enough. Guy, how about you?
I think it would have to be in the two areas that I mentioned before. I think on the fraud one, it's pretty obvious. It's for all the progress that we've made, I think there's still a lot of friction in terms of, helping someone spend $1 without necessarily, especially if it's a large, a large sum, helping them basically make that spend without necessarily either having to confirm with the bank, call the bank, confirm that this large transaction was something that they were indeed trying to do. And so I think we're making good strides there, but when you're talking about paying off debt, right? We see a lot of balances that are getting paid that are in the tens of thousands of ranges, and so that's always a point of friction. Again, if you're trying to make basically lump sum payments, to support some of these users. So I think there's an opportunity there for sure. The other area is really in the core systems for the bank. So, for those of you who might not have worked with banks before and might not be too familiar with their ecosystem, oftentimes there is this legacy thing that they build. It's like a Frankenstein system that they're operating on, and they patch it pretty much every year, and they spend millions and millions of dollars trying to repair that thing. And very seldom, they might have a dual system as well, meaning they might have another third party that they've brought in at some point along the way where they thought they were going to do a migration, but then they run into cultural issues, and so you end up with these two zombie systems that are basically operating. And so if someone could crack that nut and try to figure out a very easy way to help banks migrate off some of the legacy ecosystems that they have internally, I think there's a significant amount of TAM that can be unlocked on that space. And relationship is naturally kind of the first big problem to solve there, because naturally you're gonna have to have the trust of that executive and of that company and team to have them take that leap of faith, so to say. But again, I think if someone can create a very reliable, resilient, compliant system that banks can basically offload their legacy systems onto, I think more than half of the banks that exist today would probably jump at that opportunity.
Wonderful. Laura, how about you? You were nodding your head.
Yeah. There are a lot of problems with the core bit. As you said that, I was like, oh yeah, there should be, XYZ things. I'll stick with my original answer, which is business data. I think there are some great companies that have been created. Middesk, TrueBiz, there's some really great companies that are getting far better access to data about small businesses in particular than we had before, than we had 3 years ago. But we're still in, the first inning there, and seeing a lot more rich business data over time, I think will unlock a lot of interesting financial products and services.
Great. Thank you. Agree with you. And last but not least, Brett.
I think I would go actually in a totally different area. Not that I don't love fintech, but if I were to start all over, I think I would work on the infrastructure of the body and try to create a restore point for the human body. So just like a computer can be reset to a restore point, I think there's going to be a time and a way where we can reset the body to a restore point. I would go work on that. Yep.
I love that. I love that's what we're ending on, because God knows we all need restorative work. And I was actually thinking cloning, just because I want to clone all of you. So I think it's just been the amount of transformation you guys have done for this industry has been incredible. If we could just have more of you, it'd be wonderful. Mission-based entrepreneurs who really want to transform the world. But I think you're right. We can't do it without true restoration. So so I applaud that. And thank you so much, Rith, for that great suggestion. And who knows, maybe that'll be the next area for Flourish. So just want to say thank you guys so much for joining us. It has been so incredible. It's always such a pleasure to hear all of you and to kind of catch up on the businesses and everything you continue to create and the impact that you continue to make in the industry and the people and businesses you serve. With any questions for the viewers, please, anything about Flourish, this discussion, the panelists, portfolio companies, et cetera, don't hesitate to email at events@flourishventures.com. And otherwise, thanks again for joining us.